Good morning, everyone. Well, I guess it's not necessarily morning for everyone, but it's morning here in Tulsa. I recognize several names and people that were on the list to join us today. And so glad to have you guys back. Welcome to all of you new people who are joining us for the first time for these Data Sleuth webinars. Super excited to talk about this today. I've just been having a lot of fun, talking shop and talking about fraud investigation and sharing what we do at Workman, because we do think that what we do is just a little different and it's unique, and I'm grateful for the opportunity to be able to share this with all of you today. So today, you're probably gonna notice that a lot of what we do with finding fraud and expenses is pretty similar to the other two videos we've watched. Other two webinars that I've hosted. So there's a couple parts where I'm gonna say, we talked about this in such and such webinar, go back and watch that. So if this is your first time, we are live streaming these, which then allows us to just automatically post to our YouTube and Facebook pages, and that's under Workman Forensics. And so if you'd like to go back and see how we did some things in those webinars, you're welcome to do so. That's available to you. So let's get started. I see there's just lots of people here just wanting to learn more about fraud investigation. Of course, we're talking about occupational fraud today, and also using data analytics, or the process that we call data sleuthing. And I'm not going to go into data sleuthing again today because we've done that on the last two webinars. So if you want to learn more about what is this term data sleuthing, go back and check out those videos on YouTube or Facebook. But let's get started. There we go. All right. Also, just in case you didn't see my little housekeeping note, if you have some questions, because we have so many people on today who might be chatting or saying hello, if you have a question, just put it on that Ask a Question button at the bottom, and I'll be sure to answer those before we leave. Also, if a lot of these, there's been so much content that I've been answering the questions starting at about 11. If you've got to jump off, then that's totally fine, obviously. But just so you know, those questions might be answered at about 11 o'clock. All right, so today we're going to talk about how is cash used. Last week, we talked about that cash can be stolen in two ways, two broad ways. As it comes into an organization, a business, a nonprofit, it really doesn't matter, but coming into an organization and how it leaves the organization. So today we're going to talk about how it leaves the organization. We're not talking about financial statement fraud today. We're talking about how can someone get their hands on cash as it leaves. So we're going to have to identify how's cash used. And I think a lot of times there's this feeling of being overwhelmed by, oh my goodness, there's so many different ways people could steal. But if we can identify how is cash used in an organization, then that kind of helps us create a scope and minimize or kind of steer or direct our focus for whatever the engagement is. We're going to identify some different data sources that'll just help us walk through this process. We're going to talk about the best data sources and just some of the easiest things to do with these data sources. So you don't have to think, oh my gosh, there's a billion reports I could run out of this company. You can really just go to a few things and find what you need. I promise it works every single time. I'm also going to give you some case examples today of fake vendors, shell companies, and personal purchases. Really, the majority of the cases we work, with the exclusion of payroll, because payroll also, is a way that cash leaves the company, but we address that in the first week of these webinars. But really, these are some of the most common ways. We could talk about reimbursements, I guess, but the ACFE has a really nice, I think they call it their fraud tree. So you can Google ACFE fraud tree, and essentially everything that everything that falls under asset misappropriation, the practical application of whatever schemes they're describing usually fall into these categories in a practical application of it. So how is cash used in an organization? We have operating expenses. So if we understand what the operating expenses are of a company, for me, that's rent, some internet, some telephone, right? So it's pretty small. In another organization, it could be something much larger. They might buy equipment. They are going to pay payroll, more than likely, which once again, we're not going to talk about that, even though that is a way that cash leaves an organization. Go back and watch that webinar. We have cost of goods sold. So are they manufacturing? Are they, creating widgets or different things? And then what are all the costs that go into creating that? Sometimes we're going to pay taxes. Hopefully the owner has a salary or distributions, and hopefully there is profit. So if we understand how all of this money leaves, then we can know how to go back and quantify what's missing. Now, just kind of something interesting to think about. This hit me several years ago. In an organization, if all of these items that I've listed are already spoken for, so rent has to be paid at the first of every month, payroll has to be paid, let's say twice a month. Your vendors have to be paid for your cost of goods sold. Taxes definitely have to be paid. If all of these things have to be paid with cash, then what is the piece that a fraudster is stealing? They're stealing your profit. And that's why a lot of times it doesn't necessarily, sometimes it can go on for so long because they're stealing your profit, which should be your reinvestment to then grow and all that. So you don't necessarily notice it until you're out of profit and then you're out of money for rent. And that's when owners call me and say, oh my goodness, something is wrong with cash. So when beginning an investigation, we're going to identify the specific risks in these different areas. Okay. And most of the time, business owners come to us or with their attorneys and say, okay, we know that they're stealing this way. But then we still like to walk them through, okay, what else does this person have access to so that we can identify the risks and determine, are there other areas that we should also look at while we're concerned with writing checks to themselves, fake vendors. Then we need to remember that we have to identify who benefited from the allegations. So a lot of times we'll get, I'm trying to think of one on the spot and I don't have a example, it'll hit me later, but we'll have business owners come to us and they'll say, we know that they were taking money this way through false reimbursements, right? And then they'll say, but also we heard they're doing X, Y, and Z. Well, we have to identify how they benefited from X, Y, and Z. False reimbursements make sense to me, but this other situation you're telling me about, I don't really see how they benefited. So not that we're not going to look at it, but we also need to make sure that whenever we're putting our scope together, we're thinking about fraud has essentially two parts. We have to show intent, which that's, if you want my personal opinion, I don't believe that that's really the primary goal of a fraud investigator. Our code of ethics, fraud examiner code of ethics, is that we actually don't, we're not going to testify or accuse anyone of fraud because that's a legal decision, and we're not going to, we don't use that word whenever we're testifying on the stand. We're there as fact finders and experts to then advise where the money came from, where it went, and maybe what schemes based on our experience. But we're not going to actually talk about how accuse someone of committing fraud. We're not responsible for that. That's the judge, that's the jury. That's also the attorney's job, is really to prove that intent. What we can do is help them find evidence that helps support that intent piece. So that's, I like to make that distinction because we are not the judge or jury. But the primary focus of a fraud investigator is to prove benefit. So we're going to investigate and identify who benefited and how much, and then we can help with how did that happen, which then leans towards that intent piece. We're going to prioritize the client's areas of concern based on these risks. And then we're going to identify data sources that allow us to look for who benefited. So sometimes, especially when maybe there's a gray area, and I've got an example of this in a little bit, but if there's kind of a gray area, who benefited from these credit card expenses? Or how do we know if these credit card expenses are good or bad? What we like to do is actually approach it from and ask and answer the question, who benefited from this transaction? Was this a transaction that benefited the business, or was this the transaction that benefited the employee? And a lot of times that helps us just kind of get out of the, oh, this is a good transaction, this is a bad transaction, but focus on who benefited. So if someone is stealing money, it will, unless they're doing cash skimming, but we're not talking about deposits today. We're talking about when cash leaves an organization, it will show up on a bank statement. Now, they could steal inventory. They could steal parts. They could steal supplies. They could steal equipment. those are asset related. We're not talking about that. We're talking about cash transactions. They're going to pull cash out of the bank, not take an asset and then sell it and then they, blah, blah. That's not the focus today. So all of the things we're talking about today will show up on a bank statement. And so we also need to remember, like, this is cash. So I like to say cash is king. Tiffany Couch says cash is king. My favorite thing to say too is that accounting entries don't cash at the casino. So just because something looks weird in the accounting system, it doesn't mean that there's fraud until you've identified the cash that someone could have taken to the casino, could have gone shopping with, could have, whatever, purchased something. So you have to, so everything's going to show up on this bank statement. Now, stolen money also leaves through payroll, like we've talked about, and it also leaves through credit cards. But I kind of see these like subsidiary ledgers almost in the GL. So you have your cash account, and it's going to show all of the payments to credit cards, but those are going to be lump sum payments. Then you have to go to the credit card statements to actually see, okay, did those transactions benefit the employee? Did those transactions benefit the employer? That's where you get that detail. Because just because they made credit card payments, that doesn't necessarily mean that that was a bad transaction like we were talking about earlier. So payroll is the same thing, and we addressed that in that webinar. So what are we looking for in this data? Once again, we have to look for who benefited. And a lot of times we do this by working with the client and the attorney, because the client knows their story, but we know data. So we can put all of this data into a format that the client can easily digest, and we can work together to identify, okay, this is a normal business expense and this is not. So I'm not going to show any examples of this next slide, because essentially what we did in identifying ghost employees in the Finding Fraud in Payroll webinar is the same thing we're going to do with a vendor file. With the client, if they do have a vendor file, which I got to tell you, most of our clients don't, especially if they work in QuickBooks, because you don't have to go in and set up a vendor record to be able to pay vendors in QuickBooks. I don't know if you've done this before, but if I just need to pay a payment to someone, I can just go into QuickBooks, type in the name Leah Wheatholter, Workman Forensics, whatever, and then it'll say, oh, do you want to add this as a new vendor? And of course I just say, skip it, go to the next. So you don't put the, this was when I was doing this by myself. So I didn't go in and make sure there were addresses and all of that. So sometimes these tests are actually probably the most rare of what we run, because of the types of businesses that we're handling. A lot of them, even if they do multi-million dollars a year, a lot of them still have a pretty primitive accounting department. So, but what we're going to look for, same as with ghost employees, we're going to look for duplicate EINs, duplicate addresses. We can do the thing where we take the address, the numbers in the address, street address, and we can concatenate that with the zip code. Another thing just that we can do is we can take the employee master list, and then we can combine that with the vendor master list to see, is anyone being paid as an employee, but then also as a vendor. You can run that on addresses, you can run that on socials, EINs. We did this a couple years ago with a school, and we found out that a lot of them were on, actually, if not all of them, the teachers were also on the vendor list. So at first we're thinking, oh my goodness, we have all of these, we have all of these findings, but we really didn't. But anyway, but the point that I want to make about whenever we're looking for these things as ghost employees or looking in vendor files is that we want to make sure that we connect the data or the anomalies in the data to actual payments on the bank statements. Because just because we have an anomaly in the vendor file, that doesn't mean that cash has been stolen. We have to show how that connects to cash. And usually you're going to find that, like we talked about, on the bank statement. So if you haven't noticed by now, bank statements are my favorite source of data. And I'm going to show you an example of how to organize a bank statement to identify some potential issues. Last week I was asked, how do we convert bank statements into Excel spreadsheets like what I'm about to show you? And we use something called Money Thumb. And whenever I send out the email after this webinar, I'll include that link for you where you can find out more about it. We like the pro version. Just if you want our recommendation, but it allows you to upload your bank statements and to the software, and then you can create Excel spreadsheets like we've created today. The one that I'm going to show you, nope, well, that did not want to drag over there. The one I'm going to show you today is, this is, I don't know what's going on. Let's see. Okay, I apologize. It is not wanting to move over to my other screen. I have done this a million times. Okay, here we go. The video I want to show you today, this is a, okay, good. We're good now. The video that I'm going to show you today, or just kind of walk through this example, this is how our kind of a cleaned up basic version of a bank statement schedule. That's what we call these. And these, so let's just kind of take a look at it. We like to include the bank name, the account number. We usually give some sort of account reference. We make sure that we have a relevant period. We try to identify that at the beginning, which that's something that I didn't do till later in my career. And man, that'll just save everything if you can just remember to ask for that relevant period. Also, we like to make sure that whenever we've scheduled everything, that we tie it out to the bank statement, you know, to the total of all the bank statements. Does that, you know, do our total deposits and total check amounts tie out to the bank statement? We give every spreadsheet a line number. We have our account name, our account type, account reference. We have our statement date. Now, statement dates, just for a second. So the statement date is the date that those transactions cleared the bank. If there's a check written, then obviously there's going to be a lag most of the time between the check date and the statement date. Sometimes we do schedule the check date in certain situations, just if we think that that would be helpful or important. So whenever you're looking at a bank statement, if you're going to run like the days of the week, like we've talked about before, you're going to want the check dates because you want to see when were those transactions happening instead of when did they clear. Because if you're looking for, oh, we think they were writing checks on Saturday or Sunday, the bank's not going to, that's not going to show up on your statement data because the banks aren't open Saturday, Sunday. You know, they're not processing those days. So just one little thing I wanted to point out there. All right, so then like we did in a couple other webinars, we also include our year and our year month column. We also have a column for our names, our transfers, account reference, our deposit amounts, and our expense amounts. And then we also like to have a notes column and then also a memo. So if a check has a memo line, a lot of times that's helpful. So those are the primary things that we do. So the first thing we want to do is really just organize this information. And the way we like to do this is by sorting by name. So what's our payee name? And we're going to sort that. And really all we're doing is taking this information, sorting by name, and then we're going to do something called subtotaling. We're going to subtotal by, let me get caught up here. So we're going to subtotal by name. So there's a function in Excel called subtotal. At each change in name is what you're going to select. You're going to sum, and then we're going to sum our deposits amounts and our expenditure amounts. And then you can look at this information summed by payee. Then I like to take this and just copy and paste this over to another tab. And the way to do that is that you select everything. Oh, apparently I'm going to put a header on this. Okay, so the purpose is that we're going to create another spreadsheet where we're going to have all of the summarized information so that we can look for a few other things, but then also that we can provide the client with a summarized list so that they can help us identify, okay, we recognize these vendors, we don't recognize these vendors. Another way that you can do this too is by, here, I'm going to pause this for a second. Another way you can do this too is by combining your vendor list, with your bank statements and looking for anomalies, that can kind of help you narrow some of this down. But what I'm doing here in the video is I selected all of this information, and if I was just to hit Control-C and then Control-V to paste it to a new sheet, it would copy everything. And what we want are just the summarized totals. So what I did was I selected everything, cut all the columns you see here, and then I go to Control-G, and then that allows me to look at, to select, there's a special function where you select all visible cells, and then that's when I hit copy, and then I can paste to this other spreadsheet, which then allows me to just have those summarized totals and amounts. So the other thing is that I get really annoyed when I see all these total lines. So I like to just select all of, well, I guess I'll show you that in a second. Okay. So on this particular, okay, so one of the things we want to look for, I apologize. One of the things we want to look for in vendor information are companies. We like to kind of just narrow this down for the client to be able to look at, if we just give them this whole list, they kind of get overwhelmed. So we like to just identify some things that maybe are of highest risk. So we've talked about even dollar amounts before. We've talked about, but one of the things we haven't talked about is filtering for any time a vendor name says Inc. or LLC. So one of the easiest ways to do this in Excel is just by taking, just by filtering, like I've done here, and then type in Inc., and then that will select all of the vendors that have the word Inc. in it, or I'm sorry, the abbreviation Inc. You can also do this for LLCs. And the reason I like to do this is because a lot of fake vendors are, they want to make it look legitimate. And so they've gone to the Secretary of State and they've set up an LLC or a corporation, and then they've entered it in a vendor file, or they've written checks so that they can go deposit those checks to a bank account in that name. And so anything that ends in Inc. or LLC is suspect for a shell company. So this is just one of the ways to kind of narrow that down. What I was trying to show, what I wanted to show you earlier, I just got ahead of myself, is that you see how everything in this column says total? Well, you can highlight that whole column, do Control F to do a find and replace. And so you can just do a find for total, and that'll select all of those, and then replace with a blank. Just don't put anything in there. Then hit replace all. And that allows you to search that information. So we're going to search for Incs. We're going to search for LLCs. Once again, we could even go back, and in doing so, we're just going to highlight all of these things so that then our clients can identify that information and see, is that a company that they've done business with? Is it somebody that they're familiar with? Then we're going to do the same thing just by filtering and going through this summarized list to identify any individuals, because once again, it could be an employee getting paid instead of a vendor. It could be a contract labor person who maybe shouldn't have been on, receiving payments. So that's just another way to identify those potentially suspicious activities. Then, just like we've done in other webinars, we can search by even dollar payments to identify different payees that we want to look into further. And we just create lists of all of this for the client to be able to go through and perform these procedures. Now, we don't have this available yet, but one of the things that we are going to start offering, hopefully just by the end of the year, is that a lot of these techniques that I'm showing you, we actually have macros that do all of it. So I'm showing you the little steps, the detailed steps, but we have macros that do all of this. And so we're in the process of creating some Google add-ons where you can just add it to Google Sheets and also as an Excel add-on so that you can add that. And we'll have those available for sale. But we've got a few more things in the pipeline before that, before those get out. But if you're thinking, oh my goodness, how am I going to remember to do all of this? Or is there any way that our clients would actually look at everything? We actually have a way to put all of that together in a really nice format so that it makes it simpler for your client to look at. All right. So another thing that wasn't in the data set I just showed you, but another thing you want to look at are transfers and wires. Once again, that's why looking at the bank statement is so important. We're also going to review the audit trail like we talked about. I've got an example of an audit trail. It's the same example from last week, but it works the exact same way. And we do have a macro, and that actually is almost where we can have the Google Sheets add-on available for purchase, where you can make the audit trail into a usable table that you can actually work on. So here's a couple of examples. First, I had this CFO and the accounting records were not reconciled, which that is super common. I know as accountants, it kind of blows our minds, but they weren't reconciled. And the bank statements were summarized just as we described. We just looked for LLCs, Inc., transfers, whatever. So we identified transfers to unrelated bank accounts on the bank statements, but they had not been recorded in QuickBooks. So if we had been recording this in QuickBooks, or I mean, only relying on QuickBooks, we would have missed all of these transfers. And so in looking at this case, by looking at the bank statements, we were able to identify the loss of $475,000. And then that also helped us too. We could look at who benefited from these transfers. Well, we knew that the transfers weren't connected to the company, and eventually the CFO actually worked with us, so he confirmed that those were his bank accounts. But also, it gave us intent by looking at, okay, we can see all these transfers in the bank account, but we're not seeing them. He did not put them in QuickBooks, so he omitted those transactions, which is our evidence that helps our prosecutor get towards intent. I also had a COO that, and we summarized the bank statements, went through that whole process, and we identified expenditures to really fancy clothing stores, like a lot of fancy clothing stores. And the accounting records actually showed that the expenditures were recorded as an asset. So it was recorded against various like fixed assets accounts and inventory accounts. So once again, and this was about $350,000, and that was just for the fancy clothes. The case is much bigger than that. But we knew that the COO was the recipient of the fancy clothes. There was no business benefit. It was not part of his job at all. And then the intent piece was helped, that piece was given more legs just because he hid the expenditures in the asset accounts so that the expenses didn't appear too high where the owners might have noticed. I also had an operations manager, and once again, by using that bank statement process, we identified LLCs that were not related to the business. And whenever we looked on the Secretary of State, those LLCs were actually registered to the LLC itself. So, which helped with proving, or helped kind of give that intent piece some legs. And the operations manager received those payments. They were his LLCs. The LLCs had his address as the address, but the registered agent was the LLC itself, so that whenever we went to search for that individual in the Secretary of State, we couldn't find that easily. Like, we would have had no idea to look for these LLCs. The loss in that, just for that scheme, was about $1 million. So in credit card data, we're going to do the same exact thing. We're going to organize it the same exact way as the bank statement. We're going to create a schedule. We're going to look for payments. The only other things that I'm going to say on credit cards is that you can use the day of the week function. And because credit card statements have the transaction dates. So we automatically, in our credit card account schedule, looks just like that bank account schedule, but we go ahead and we include that days of the week formula so that populates. You can also look at the locations that'll come across in your payee information. A lot of times it'll say, restaurant, Tulsa, Oklahoma. So we create a column of all the locations. Also, some credit card statements have the various categories, and so then that's helpful. We also like to look at the number, like do a count or a dollar amount of meals per month, because that seems to be one of the most abused things on a credit card. We also like to look at the location of an employee compared to the calendar. So that's why that location column is really important. We also need to make sure that any credit card payments we have, that they tie out to the credit card payments that we're seeing on those bank statements. to make sure that the credit card statement we're looking at was actually paid for by the business. That's sometimes a link that's forgotten. So here's one example. We had this executive director of a nonprofit summarize the bank statements, and we identified some credit card payments, but the organization didn't have any credit cards. So then we were able to actually, one of the employees still had some copies of these credit card statements. And so then we scheduled and summarized the credit card transactions, and we identified tons of cash advances at the casino. And one of the things is that whenever the executive director would pay his personal credit card bills out of the nonprofit, he would hand his statements to his assistant and ask her to shred them. And so that helped with the intent piece. We had the assistant was actually the whistleblower and still had copies of those credit card statements. And also we knew that the benefit piece, that the executive director benefited from this because the credit cards were in his name and he was the one going to the casino, and that was a $1.5 million loss. We also had an office administrator who was using the credit card for legitimate expenses and also not legitimate expenses. And so the way that we kind of helped reconcile that, it's going back to the beginning, we looked at who benefited. So did the business benefit from this expense, or was this a personal expense? And so that's how we distinguish between the two. And we did that using the locations and also the weekdays to look at when were these transactions taking place. She wasn't supposed to work on Saturdays or Sundays. She should have been in the office this day, but instead she was traveling, those types of things, and helped us quantify. We found about $105,000. The intent on this one was a little more gray. We didn't have a whole lot of intent evidence on this one, but the office administrator wouldn't let anyone else enter her credit card charges. They entered everyone else's but her own, so she just maintained that control. All right, so I have a few questions, and if you've got to jump off, I totally understand. I feel like I was flying through that today. Okay, how has being certified with ACFE benefited your career? I'm planning to take the exam and get certified over the summer. I love the ACFE and the CFE credential because of all of the training that they provide. And a lot of their training is hosted by people who have actually done this for a living. And so I'm super grateful to have become a CFE. And I highly recommend getting involved in a local chapter. That's where I learned a lot of really hands-on practical application of this stuff very early in my career. Does your company provide vendor master lists and employee master list creation as a service to your clients? We do not. The majority of our work, because of working with law enforcement, a lot of times we're hired after something has happened. We don't do a whole lot of preventative work, although we would, but we stay busy not doing that because we prepare everything like we talked about in the last few webinars. And then in our next webinar next week, we're going to talk about how to prepare your findings for law enforcement. And so since that's our niche and where we hang out, we don't do a lot of that. Kelly, you asked, would using pivot tables also work well for this? Okay, so pivot tables would do everything that I just showed you. The problem is that pivot tables are difficult to review and to verify. So when I'm quantifying a loss, I want to make sure that it's absolutely right, that it's based on best evidence, and that if I'm unsure, we don't include it. So the last thing that I want to have happen is include something in a report that I cannot prove. And a subset of that is that my numbers have to be reliable. So I personally do not like Excel pivot tables. However, I really like ideas pivot tables. So because they're very easy to tie out, you can see exactly what you're comparing and make sure everything's included. So it is at Workman, as soon as a data analyst is hired, they're told, do not use pivot tables. They're good for just a quick, like, let's just see what happened. But when it's something that we need to produce to the client, to an attorney, we do not use pivot tables, but it would do the things that I showed you today. And Dan said that the ACFE annual conference will be virtual this year, and I did see that. So that will be great. All right, I think that's it. So hope you all have a wonderful weekend, and I'll be here next week, and we're going to talk about same time, 10:30, and we're going to talk about presenting our findings to law enforcement. And have a great weekend.